here. You all look lovely this morning. Perfect. So today we're going to debunk and demystify a couple of things. And I like the representation that we have in the room. To an extent, we are all in the financial sector. So what we're going to discuss will not only be timely, but important for all of us. First and foremost, risk management and fraud. We're well aware in that. I will not debunk that. What I'm here to do is discuss the electronic or the automated digital KYC management process and the digital identity and how we can apply it to us. I'm not sure if these are all parameters that I need to facilitate this talk are here with me. I could get help.
I think there are two buttons.
Good.
You found it?
Perfect. All right. So we're going to debunk and we're going to look at how eKYC can be a first-line mechanism for defense for us. Again, contextually, we're looking at risk management. So a couple of people have been here and have introduced a couple of things from an innovations perspective that is good for us going forward in the financial sector. However, looking back into the current architecture that we have, most importantly in-house, for first-line support and engaging business, then we are subjected to a couple of risks. And this is important for us to look at what are the mechanisms, what are the controls, what are the available platforms for us that we can leverage on to facilitate this risk. Yes. Thank you. We're going to look at how then we can also fortify security with end-to-end ID management and identity verification. Thank you. We're going to look at finally how we can achieve compliance. It's a big thing, it's a big deal, it's important to us, it's important for our regulators, and how we can preserve security with modern risk management strategy and advanced intelligence, fraud intelligence, sorry. So first and foremost, let's look at KYC, the digital version of KYC. It's our first line of contact, interaction with our customers, our direct stakeholders. How is it currently designed? First and foremost, we have the manual onboarding. It's a cyclic process, it's iterative. We have identity information submission, then we have to validate that. Then we have to look at the exception list provided by our regulators or the key databases that we're looking at to identify persons, a group of persons that we cannot interact with or engage with at a business level. That process, to an extent, is usually regarded and considered a manual process. We will automate to a certain level, not automate, the entirety of the process. Now, does this present some risks? Absolutely. Let's look at the risk landscape. First and foremost, customer deterrence. It's a long, manual, boring process. Why do I need to walk to a call center? Why do I need to walk to a bank? Why do I need to walk to any facility for you to gather and identify and validate who Mary is, where she's from, how she looks like? Can I do that online? Human error, we are all prone to this. The facilities that, again, we follow through, or the processes we have entrenched in-house to facilitate KYC, know your customer processes, know your vendor processes, know your partner processes. Again, extremely lengthy and must also comply with certain obligations for retention of data. Now, having this data in-house, can it be modified, can be accessed by unauthorized persons? Increased regulatory risk. Is it a one-to-one match? Every and all persons who we're engaging with, are we doing proper and thorough background verification, if you will, on these persons for us to facilitate or conduct business with? Ongoing operational costs, we're going to look at that. We're talking about compliance obligations of a legal nature that you have to retain documentation for Mary, for Anne, for whoever, for 7 years plus. Are we looking at the architectural infrastructure costs that go into maintaining those key requirements or key obligations, the salaries, the vendor costs, the technology infrastructure, even where we are automating the KYC management process? So the cost universe is big. We can assume that if we're doing eKYC or the typical manual process, as you're normally associated or used to do, will have primarily the cost of salaries for the persons associated to those processes as an ongoing OPEX cost. Unfortunately, that's not where the buck stops. We have the vendor cost, we have the technology and infrastructure cost, we have the cost of the regulatory fines, if and where we are found non-compliant. We have the cost of the reputational harm we incur if, again, we do not substantiate those contractual, legal, regulatory obligations that we're subject to. Cost of loss of business. I've talked about customer deterrence. If it takes 30 days, a whole 1 month for you to validate who I am, I'll not be motivated to work with you. I want convenience. I am Gen Z. I am millennial. That's the future for the financial sector. Okay, so if we are automating, how will this look like? And what is actually automating KYC as a process? It leverages on innovative technology to digitize the manual processes we are accustomed to, and we're verifying customers' identities electronically in a paperless way. For us to open a bank here, I have to get, to an extent, a verifier or a supporter. I need to submit everything about me, where I live, and the map to go to where I live, my ID, my postal address, my email address. So much information that I have to physically come to a center and submit. What KYC does is leverages on technologies and on key databases that ecosystems can create to allow us to have a seamless, paperless, efficient, fast, transparent process to accord us to translate the manual processes onto digital platforms. So, are there any benefits to leveraging on technology? Absolutely. First and foremost, it's fast, it's convenient. Who are our target customers? People looking for those attributes, fast and convenience. Reliable digital identities. We're going to look at how that can be actualized. Is it real? Is it tangible? Is it near reach for any of us sitting in this room? We're going to look at that. Scalable. We talked about services being rendered. And we talked about a couple of figures across the continent, across the globe, essentially for people who are unbanked and banked and or unbanked. I am in the insurance space. We are suffering. And by the way, we're going to elections. Insurance is key. Please say hi after this. But after that, or as we do that, we're going to look at how we can apply eKYC as tangible, operational, feasible platforms to which then we can leverage on and we can partner across the ecosystem. It's the same document Mary will present to KRA, Mary will present to Absa Bank or to Safaricom or to Central Bank once they roll out the digital currencies. It's the same type of detail, so why replicate it? Why have these silo data centers carrying the same data? Can we optimize that architecture? We're going to look into that. Boost operational efficiency and reduce human error. Goes without saying. It's one database, verifiable, immutable, non-refutable set of data character sets for each and every person, for example, in a region, in a country, in a locale, etc. Most important, enhance compliance levels, and most importantly, also boost ecosystem collaboration. We've talked about partnership here, talked about innovation. How then can we accelerate our key deterrent, how we actually engage the customer and how we retain the customer end to end? So are there any benefits to automating this process? Absolutely. First and foremost, risk management. The deterrence that we're looking at for onboarding the wrong type of business, the fraudulent persons who are here to rob us of our monies. The developed ecosystem will improve data quality for businesses to exchange within the ecosystem. If it's all about partnerships and collaborations, let's look at the mechanisms that will facilitate that over and beyond the simple onboarding process, but the entire customer lifecycle. Identity continuity, something very big. We've talked about onboarding the Gen Z. That's 19 to 22-year-olds. But they'll require banking services. They'll require financial services 30, 40 years down the line. are the mechanisms we are applying today sufficient and adequate to ensure we will retain that customer and make sure that they are happy with our service delivery and especially their pain points? Remember, customer is key, correct? Is customer king or things have changed? Okay, so customer is king. All right, so let's look at how, first and foremost, how it works. So eKYC, as I mentioned, leverages on a couple of things. We're going to look at the customer perspective, and we're going to look at the business perspective. So we have company A, let's call them Jubilee, for argument's sake, and we have a couple of service providers there. So we can get information if we are leveraging on unified architectures, centralized architectures, where we are holding customer details that are irrefutable. We'll go to Google, we'll go to web services, we'll go to verified sources, such as IPRS. We'll go to and do address verification, bank verification, eKYC declaration, and we'll provide the same architecture, facilities for us to demonstrate our compliance to all applicable stakeholders, including our regulators and our auditors. From the customer perspective, we're looking at ways where we can simplify their KYC data upload. No longer will I require you to come to an office somewhere, to a center somewhere, submit your papers. I have a copy and a record of that forever or for 7 years or for the duration that I'm contractually or regulatory obliged to keep. I'll do your facial biometric checks. We'll have the international document identity verification, and it spans across beyond boundaries for the applications of these architectures. If we break it down, we'll have, and we can sample some of the key features for eKYC, live identity verification. You submit your documents, we verify who you say you are, is indeed who you are. So we do face verification on the document you have submitted. We require for video capture, we require for what are they called? Selfie capture for that. But for the platforms that provide the eKYC, how then can we validate a good working solution for us? First and foremost, false rejection rate and false acceptance rate. And we're going to debunk what that really means. Second, too, we talked about leveraging on available technologies to allow a seamless process for onboarding and the entire customer's lifecycle. Machine learning, data tagging, liveness detection, blur and glare detection, OCRs, barcode readers, auto capture, expired IDs, etc. All are validated on one common database. Let's look at how that looks like. So, the first application would most suit us all. The first thing is applying KYC databases on blockchain. Ever heard of blockchain? Yeah, we're familiar? So, by the image on the screen, we have one KYC register or registry used and applied by multiple ecosystem players. We'll have companies such as insurance, we'll have financial sector, banks, fintechs. We'll have stock exchanges feeding into this data. We have government, credit rating agencies. And because of the immutability, the non-refutability of blockchain, it means that all data uploaded on those repositories can never be changed. We cannot tamper with that data. So if 51% of the network ecosystem participant agree to the change of data within the KYC registry, that and that only will accelerate the change of that. So the data stored in there cannot be changed, and it also provides facilities for other providers to leverage on the newly established ecosystem. We have what we call here virtual asset service providers who are essentially providing services virtually. So they'll look into cooperation with multiple trusted corporate data validators to accurately acquire the data, validate the data, and store the data in a decentralized blockchain. So if I'm sitting in Marsabit or somebody is sitting in Addis Ababa, and we have a KYC register across East Africa, then the market for Ethiopia, for example, drastically opens up. It's easier to do business in Ethiopia. Can I hear an amen? If we apply these mechanisms, these simple technological advancements on manual processes, we're not only reducing the risk factor to our operations, but also opening and leveraging and creating opportunities to which we can leverage and ease how we do business. Now, let's look at another application. We have here the government infrastructure. Again, same principle applies. Now, has this been applied anywhere? Has this been tested? Yes. In Northern Europe, we have Sweden, Norway, Finland, and Denmark coming together to issue what we call digital identities. Now, these digital identities are fully anonymized. What does that mean? In Northern Europe, anybody ever heard of GDPR? There is the requirement to keep privacy paramount in all our operational tasks. So what those governments have instituted is associating anonymized identities. You cannot link this series of number to Mary, but the government knows how backend the system will translate and pull up the true record of Mary in totality. Now, what are the applications on that? What they have created is an ecosystem as that, provide the eKYC register, and to then banking sector, medical, health insurance, all can tap into that to verify and provide real and accurate data to further validate and facilitate business. Malaysia in Southeastern Asia also has the first country that has also associated online identities for its end users. So taking this back to our organizations, to the communities and forums that we are involved in, is not only timely, it's important, it's relevant, it's contextually specific to our needs for that Gen Z target that we're looking to retain and to provide services 30 years down the line. So we have eKYC registers, we have processes around that, we have provided regulation around that from data privacy, the security, how and when the data will be updated and again replicated across the decentralized ecosystems or blockchains. How then can we measure? How then can we demonstrate our return on investment for establishing such ecosystems or such facilities across the board? I talked about the false acceptance rate and the false rejection rate. For most organizations, many will not admit this, but when it comes to KYC, data validation, the source of validation or data source validation sites are where the problem lies. This is where we cannot validate this person is truly who they say they are, and they do not have an economic crime background. That is the primary risk area when it comes to KYC. Now, what these solutions allow us to do is provide platforms to which we can measure the false positive rate. Right now, we're doing it decentralized. We're looking at the UN sanction list. We're looking at whatever other databases for sanction list. Now, if we collate all that data into one repository, we can have an unrefutable, inarguable process to which then we can validate who these people are and what their crime or their financial crime background looks like. Customer lifetime value. Again, things that we can accelerate when we are looking at eKYC. We talked about the deterrence rate, talked about people not wanting to be there. But essentially, if we can measure that, we can demonstrate to business the business case for having these platforms or these infrastructures readily available for us. Customer acquisition cost goes without saying, easy to do. If we can demonstrate nobody needs to board a bus, get to another port, get to another bus, et cetera, then it's easier for us to do business in some certain markets. Now, we talked about also fortifying security with end-to-end ID management and identity verification. We talked about digital transformation. Somebody came here and talked about how every company is now a technology company providing a service, whether it is insurance, whether it is communication, data, banking, etc. If we're all taking our processes, our operational tasks online, then what we're creating is a digital risk environment. If we have digital ID management, then it's easier for us, back end and front end, to do identity verification for the customer and identity verification for our own internal resources. If you're talking about partnerships and collaborations, we're including third parties who have access into operational data. So you also need to account for that. When it comes to in-house resources, we can then apply digital identity management, which can track, monitor, and retain logs to which we can trace each person's activity on the shared infrastructure. So it goes both ways, and it cuts both ways. What we are doing and prescribing for our customers from a risk perspective, but because again, there is the risk of internal resource collusion and or compromise, we also need to look at how people are accessing these repositories. Now, achieving compliance in preserving security with modern risk management and advanced fraud, it goes without saying. The same old adage applies. I cannot create a robust risk management process in the caveat of technology, in the caveat of people, in the caveat of process. All those things must collaboratively work together iteratively. What does this look like? So we must have a transformation approach that relies on technology not as a one-off, but as a process that is continually improving over time. We have to identify the universe of possible interventions and connecting the business with the proper information as and where we need it. This will facilitate investigations, will facilitate our investment decisions, will help us also with trend analysis over time. Now, for fraud management, we all know what that process looks like, but we also need to maintain a proper process in-house based on the same analogy: people, process, technology, and associate a metrics process alongside that. How does that look like? We have to define the targets, our key performance indicators for fraud management. How well are our data sources? How well are we collaborating with partners to validate all this? So we're combing data internally and combing through external sources. Redesigning process controls. Again, we were subjected to manual processes that have iteratively or to us time slowed down in terms of the redesign, readjustment that will facilitate future fraud management activities. Vendor approach. I am highly against vendor reliance. What we must do is adopt and align competence paths for the teams working in fraud management processes to ensure that they are acquiring competences, skills, and knowledge on an ongoing basis to improve the fraud management lifecycle. It does not stop just because we have technology. People are figuring out new and advanced ways of carrying out this fraud, from identity fraud all the way down through the lifecycle. Refining risk management framework, it's not a standstill, it's iterative. The business is dynamic, hence your risk management strategy equally must be dynamic. Advanced fraud detection and analysis technologies. Now, these are the items that we can iteratively look into, not only in silo within unique entities, but across the ecosystem. So, any solution, this is a good giveaway and a takeaway, combining AI-powered technologies of text analytics, machine learning, predictive analysis, data mining, statistics, and natural language processing will always offer a strong and reliable data-driven solution to provide fraud. If you're in the market looking for any solution that will help you with fraud management, those are the key factors to look for, or the key features to look for. I will stop there. I'm 3 minutes over time. Any questions?
Are we good?
There's one question here.
Well, all right.
Hello, Dennis Mbugua. It's a good time to be here. Thank you, Mary, for the presentation. And some of the concepts that you touched on included blockchain and how, it can power new use cases in the risk management area. But the value of blockchain comes through decentralization. Okay, that is what is actually out there. But then decentralization calls for network effects. How do you convince your competitors in the insurance industry, for example, to take on a blockchain technology that you're fronting. So for example, you're fronting using the Cardano blockchain, and another insurance player is fronting using the Ethereum blockchain. How do you get into the same room to be able to convince others to build a network that will actually be valuable, rather than just probably having each player running their own blockchain technology? Yeah.
Thank you for the question. And this transcends not just insurance, but also across the financial sector. First and foremost is the cost-benefit analysis. Different blockchains have different pros and cons, and that will be our first indicator on our decision-making. 2 is the cost element associated to this. Now, we're looking at cost element in 2 ways. The cost of risk materializing and the cost of setting up this infrastructure on a continual basis, both at OPEX and CAPEX level. Now, we have to communicate to senior management using their language. How do they understand this? Financials. Break it down for them to understand. Now, with competitors, with the ecosystem, as the way it is architectured, there is no way we can have shared infrastructure in the caveat, in the gap of not having it somewhat regulated and lobbied by the regulator. So hand-holding this exercise will include having all players in the ecosystem speak one language, propagate that upstream to the regulator. The regulator will enforce one process. What must happen for this blockchain to be sustained? 2, what are the mechanisms as to which we will validate the data? 3, how will we retain the data and for how long? Remember, we're not operating in silo. For instance, in Jubilee, we work with the formula for data retention, 7 years. That is the first criteria we have to satisfy in line with the regulator, plus an additional 10 to 15 years due to our legal requirements for any future claims. So I cannot prescribe, no, my blockchain will be 10 years, this one 15 years for us to authorize. Again, it has to be seconded, but fully backed by the regulator to make it a strong, legal, reliable framework that we can all rely on and accrue value. Any other question?
Right. I think we should take all questions at once. Kindly. So let's get to know if there's another question again. Is there another?
Yes, I have a question.
Yes, no, apart from you, is there another? One here. So only that and that question. And then we'll be done. So let's start with you and then you ask yours. Thank you.
Okay, thank you. Quite a good presentation, Mary. Maybe I'm talking from the FI kind of thinking. Sorry, my name is Charles Kenji. And we are looking at an industry that has been plagued, especially in the partnerships and collaboration avenues, with a lot of fraud. And I'm not talking from a EKYC perspective, actually an in-life kind of perspective. Currently, we are seeing, especially the fintech world, traversing across our corridors, meaning it's an East Africa play, it's an African play, it's a global play. But then the sanctions that we are looking at, the sanction list that we're having, is only maybe on a global scale. Locally, or what we're internalizing here on FIs, is there a plan to build a bad actor, good actor kind of scenario, even on a centralized basis, that can be consumed in the financial industry, either for banks, insurance, and the rest, that can be able to do an on-screening? And maybe I'm based on the part that what you've seen is a replication of behavior where Charles comes to Jubilee, messes up things, you chase me, I go to Mutual, I do the same kind of thing, and all this was not seen. So maybe building from that. Thanks.
Thank you. Yes, quickly.
Hi, Mary. Thank you. Excellent presentations. My question is just, perhaps I missed it and you did say it, on the EKYC execution and how you're running to build that ecosystem and how you would be able to verify businesses. I don't think I quite caught that. I understand how you can do it for individuals. I'm just not clear how you would do it for businesses. Do you have APIs to BRS? What is it you would be using to verify the identity of the businesses? And remember that, like he says, Kenyans are dodge. They have 10 businesses per person. And how do I know that this person that I'm registering now, if I'm joining your ecosystem, is a legitimate, viable business?
All right. Thank you.
Perfect. Good questions. I'll start with the gentleman. Thank you for your question. Is it happening in the country, in the region? Unfortunately, no. Nobody is building or thinking about establishing such registries based on blockchain, whether it is for KYC and or screening for AML. Is it being done globally? Yes. I'd encourage you to look at applications being done in Malaysia and Southeast Asia and also in Northern Europe. What they are doing and the approach that they're taking is very simple. It starts from the regulator. Garbage in, garbage out. If we have loopholes within our regulations, our legal requirements for reporting such incidences and having a refutable, undeniable copy of the data in a structure that can only be modified following certain criteria, that would be good. I'll give you an example of what is happening in Cyprus. You can buy a passport and become a nationality. And this is subject to I like you, which is, now who is buying this? From the last report I was reading, this is a Chinese person with a humongous financial crime background. Now, I can give you $2 million in cash, provided you give me the passport. There are mechanisms already in Cyprus. But what allows us to circumnavigate that is the question. And it all starts at legal regulatory framework. So unless we control that, I don't see how we are going to have refutable copies of accurate, complete data. It's impossible. To your question, and very good, yes, we can do eKYC registers for end users, persons, live persons, very effectively. But again, the same principles apply. Without the regulator, garbage in, garbage out. There needs to be mechanisms defined. And why we're talking about ecosystems, we cannot be financial sector in the caveat of having our legal regulatory frameworks, people's teams, and organizations in play. So these people, again, must come and ratify, review the ongoing adequacy of the mechanisms as to which we are setting up companies and how we can validate the ongoing adequacy of the data submitted to validate if this business is still up and running or we have bankruptcy and they're all out. So again, the same principles applies. If this is being done, unfortunately, no. IPRS is good for end user data, but for BRS, completely lacking. So there's no way I can mandate, hey, government, do this, unless we all collectively have the same muscle, have the same language, and we speak the same tone for them to effect change. I hope I answer you. Right.
Thank you so much.
Thank you so much for your time.
Thank you so much for the momentum. So much. Asante sana.